The Alliance for Charitable Reform is a project of the Philanthropy Roundtable that educates legislators and policymakers about the central role of private giving in American life and the importance of protecting philanthropic freedom. I'm Marques Chavez, Communications Director at the Alliance for Charitable Reform, and today I'm joined by Joanne Florino, Senior Vice President for Public Policy at the Philanthropy Roundtable. We're here to discuss topics that are related to the charitable deduction, tax reform, and other issues relating to the nonprofit sector. So, Joanne, thanks for joining me today.
Happy to be here.
Let's go ahead and start off with the Tax Foundation series of reports on the blank slate. This series of reports was called The Economics of the Blank Slate, and it was created to discuss the economic effects of repealing the various individual tax expenditures. The last one, the 11th and final installment of this series, was focused on the charitable deduction. Can you go ahead and tell us a little bit about what was in that report?
Sure. Well, what the Tax Foundation did with all of the credits and deductions is they actually did a two-part analysis. In the first part, they looked at what would happen if the deduction or credit was completely eliminated from the tax code. And in the second part, they looked at what would happen if there was a trade-off of that credit or deduction for a lower tax rate. So when they looked at the charitable deduction, they did the same thing, and what they learned was that if you completely eliminate the charitable deduction, you would add $39 billion in revenue, but you would reduce employment by over 130,000 jobs. And in the second part of the analysis, they looked at reducing the tax rate by 3.7%. That's what they felt they would get in a trade-off for the charitable deduction. And there they determined that it would boost GDP by about $19 billion, and it would benefit the economy by adding 200,000 jobs. So this is pretty much the way it's gone with all the credits and deductions that they've looked at. There are definitely trade-offs involved, and so that's what we're looking at now. And it's the first time that I think we've seen numbers for the elimination of the charitable deduction.
Well, when it comes to eliminating the charitable deduction in exchange for lower rates, there are a few bumps in the road when it comes to that approach, are there not?
There are actually a lot of bumps in the road. I mean, the Senate budget that was passed in the spring actually called for $1 trillion in new revenue. And Senate leadership has not given that up as a principle of tax reform. So Senate Majority Leader Harry Reid reiterated very recently that he would still be looking for $1 trillion in tax revenue, and that at no point would there be any attempt to lower rates in the process. The president, of course, had already in his president's budget in the spring asked for a 28% cap on the charitable deduction, and his most recent address, which was actually about corporate reform, again mentioned the need for new revenue. So we're definitely dealing with the search for revenue, which just reminds us over and over again how important it is that we maintain our principles about the charitable deduction and maintaining it as a full charitable deduction in all the stages of tax reform.
Actually, when it comes to that, this report, it went beyond just the raw numbers. There's an excerpt I wanted to read to you that talks about the uniqueness of the charitable deduction when you compare it to trying to lower tax rates. It says the difficult policy question regarding eliminating it in favor of lower tax rates is weighing these benefits against the social desirability of the charitable deduction.
I think that, looking at GDP and revenue and employment, first of all, we have our own notions of how much the charitable deduction adds to the support of the charitable sector, which is an economic force in the community. I mean, we know that, in fact, it is, private wealth and the private sector that creates the philanthropy that provides the opportunity for a charitable sector to exist, and no one would ever be disputing that. At the same time, it's very clear that we know that charitable employment in this country is 10% of the workforce. So we were happy to see the Tax Foundation looking at that. What we have seen, though, in some of the states that have put through tax reform is another piece of this puzzle, which is, if we eliminate certain charitable incentives and the charitable sector loses a lot of revenue, what cost does that actually create for government, which may well have to pick up some of the services that are no longer being delivered in our communities by nonprofit organizations? And I recently had the opportunity to speak with legislators from Kansas and North Carolina who have just adopted tax reform legislation that included full charitable deductions. And in both cases, I was told that this was in fact part of the calculation, that losing the services provided by nonprofit organizations in those states they believed would in fact impose a greater burden on government and therefore more cost on government. There's really no way for the tax foundation analysis to look at that, and I think it's just wonderful that they recognized that there were so many other benefits that can't be measured.
If you would like to learn more, you can visit our website at acreform.com. You can also find us on Facebook at facebook.com/Alliance for Charitable Reform, and we're also on Twitter. Our handle is @ACReform.